Today I made a connection to the fact that stock market tends to trend. Either it trends or it becomes choppy. And when it's choppy, the market doesn't know which direction it wants to go. However, when it's trending, I'm talking about a high order market chart formation. And this is something that I had no idea of. And here's the example. So what I would do is essentially gamble and put everything into every part of my capital into the market. And then I'm just thinking, wishing and hoping that it's going to continue in the path that it's going to go. And then it turns out that the chart formation was forming a nice rounding top on a daily time frame. There you go, daily time frame. Now that I've been exposed to the Wall Street language or the lingo, I'm using the Wall Street day trading lingo, which is daily time frame. Now the daily time frame provides some clues, just like the moving averages. The moving averages plotted out 20 days out on a daily time frame provides a direction that the trend is moving. Now, when that trend is occurring, overall, the market condition wants to continue on that trend. And on that day, if the market moves above that moving average or VWAP, or it's spiking up beyond and it's actually creating a gap between the average and the current stock price, there is a general trend for the stock price to come closer to the moving average. So if the market is moving down and the stock has spiked up, there is a high likelihood that the stock will drop down towards or even down below the moving average as it would do to an overreaction. But the general underlying, the fundamental average or of that stock, if I'm looking at a particular stock, is moving in unison with the particular market, with the particular indice is related to, such as the Dow or the Nasdaq. And what I've noticed is that in the past, what I would do is this. Okay, in the past, what I would do is this, and I probably still do that too, and I'm going to fix this. And what I do is I would put everything into my trade, and then the move would move against me. Now, what that means, I'm thinking to myself, oh, it's got to go back up tomorrow, right? And so I'd hold it, and then I would add more. And then the next day, it would drop again. And I'm thinking, oh my God, it dropped even more. So it's even more sure that it's going to go up, right? And it drops again. And then at that time, normally it occurs on a human psychological level, like maybe 3 times might cause an individual to be at its maximum threshold pain of holding on to something. And about that time, a sizable account has been depleted 80%. So what's happening is this. The fundamentals have changed for that short time frame. On a long term, like 100 years of the stock market, right? Since 1929 stock market crashed and it started to climb up. On a long term, things will improve and the market will keep going up as the indices are being attracted to add and then substitute with a higher performing stocks. And so on a particular time frame that I'm trading in, I must be aware that there will be a subtle shift in the trend. And when a shift changes, then then the capital that I have reflects the direction that the market is going, and either I stop, exit, or reduce my trade size, or inverse and reverse my thesis, the further drawdown is high likely, and therefore I'm moving towards looking into the trend trading at this point. And I look forward to see, in the past, what I would do is I would trade for reversals, and reversals are difficult to pick out. It's difficult because it's just, first of all, it's difficult. It's difficult to recognize. Recognizing that is a great idea. However, for somebody with my level of experience, it's difficult to acquire, and therefore, when the trend has changed, such as on a daily time frame, the market is just dropping and dropping and dropping. The price of the stock starts at the high of the day and ends at the low of the day, and there's essentially zero reprieve between the open and the close, and therefore, when my mind is set up with when my mind is made up thinking that is a bullish market, and that there will be some sort of reversal at a certain point, and then I place my trade, even though it's actually knifing down, it turns out to be a heavy loss day, and that triggers a emotional lobotomy, essentially lobotomizing the logical side. And even my logical side, as a semi beginner, it's difficult to fully comprehend what the market is doing. That just causes even greater amount of psychological mental capital loss, and therefore the turning the corner, just like the corner, the line that was actually wrapped around the building that's over here this morning. It's right. That essentially is the turning the corner, it looks like. And as I trade and I start to make money based on that principle, it is essentially, logically speaking, going with the trend is it. Whether I practice that on a daily basis is the turning the corner.